Welcome everyone to the Kendall Report. It is Thursday. This is the final report for this week, and what a day we had. I have to tell you, I'm seeing many days where we get a print of RTX and then STX the same day and just barely escape the STX sell signal. So I've been talking about it for days, folks. I've been putting up with some heat on Twitter and on the channel. Everybody telling me I'm wrong, it's not rolling over, and we had this climactic day. I tell you, I was shocked that we were able to trade into the 4630 handle early this morning, and then we kind of sold off, and then we rebounded again and went up to about the 25 handle when we got the news that Japan is going to let their long-term yields float, and everybody freaked out, and the rest is history. It's really an interesting pattern, and one of the things I want to just set up things, and then we'll go into some more details here in a minute. But one of the things I want to make sure that you kind of understand is this was what's called a key reversal. So it's at the high end of a sequence. So this is the highest prints we've seen in this sequence. Get an outside bar, and so yes, I saw somebody mention, is this a 3-day trade setup? It absolutely is. And it's going to be interesting to play it because you have to go over the weekend to try to play this. But I'll talk about that when we get into the technical part of the market. And, you know, it was very interesting because we started off today that everything was bullish. You know, we had GDP coming in at 2.4%, revised upward from 1.8. We had just about everything. We had housing numbers were looking good. Claims were down. We got to 1.69 on the continuing claims. That's a crazy number. Durable goods up 4.7%. And then you couldn't ask for a better setup. The economy's growing. Powell and all the folks are doing a wonderful job, even though most people won't give them the credit for what they're doing. But this reversal will be interesting because I know I haven't had a chance. We all just found out about it, and it's interesting. The way I'm doing the channel now is the market's closed. I have a 2-hour break, so I take an hour to myself, hour and a half, and then start prepping for the show. And so I haven't had a lot of time to look into this stuff. So by the time we come into Sunday, I'll have some ability which to be able to sorry, I get a computer glitching in behind me. I'll have the ability to look at this Japanese situation and look at it a little deeper. Does that mean they're going to start selling US bonds? I don't really have anything to say on that at the moment, but that certainly was the reference that a lot of folks were looking at, because that's why we saw the 10-year bounce up, almost 4.01. And I just referenced a couple of things because yesterday I was talking about how I thought at some stage that the front end of the market would stay stable and the back end would start to climb. And we actually saw that because the 10-year yield was up 4.18%, and the 2-year was only up 1.57. So we saw that steepener trade. And I'll go into that more detail here when we look at the numbers, and probably it's very likely that I'll go through maybe a yield curve analysis. I haven't done that for a while when we come into Sunday night. So just looking at some other stats here. So what else do we have? We've got tomorrow, we have the PCE prices expected to be up 0.4. Year over year is 3.0. And then on the core, it's 4.2. So we'll see how that comes out. We could just see maybe not a reverse of a reverse, but it could be interesting to see how those numbers come out. And when I talk about the 3-day trade setup, this one could be a significant one just because we've been seeing the algos for they've been indicating that we're going to close under the 10-period moving average. Guess what? We did it. That's what they've been telling us for days and days. We just had to print up into the 4630 handle first and make everybody feel like it was never going to happen. Just looking at a couple other notes here. So let's kind of just unpack just a couple things, because yesterday, Powell made it clear, and I also talked about this in yesterday's stream, is that I believe that there's going to be another increase in the September meeting. I don't think they're going to skip a meeting, because they don't want to put that message that they're doing that. They skipped the previous meeting, then they raise this current meeting, and then they skip and then raise. Paul made that clear that that's not what they're going to do. I think they're going to just go ahead and continue to move up toward that 5.5 to 5.7 on the Fed funds. And, I thought the other thing, I watched the ECB conference call. It was like Lagarde just took the script from Powell and read it. I mean, it was the same thing. I thought it was interesting, the style of Lagarde versus Powell. No matter how stupid the question is that these reporters ask Powell, he answers them. And they'll ask him the same question over and over. And Lagarde is going, I don't know why why you asked me that. I don't even know why I would answer that question. It was funny just to see the demeanor, the difference, like the arrogance that she has. And it's very, very interesting. But in the same respect, she didn't say anything. It's basically everybody's following the Fed. So that all of these meetings are being coordinated across the board. The only independent of anyone is Japan. So this is an interesting move by them. And they're not being controlled by the U.S. Fed like everyone else. Everyone else is just puppets, or so it would appear, no matter all in the Western world. That's all that's going on. So we're seeing everything being just directed. I'm sure there's conference calls all the time. They're talking all the time. There's no doubt about that. So it was interesting, because just one quick comment. So this reversal happened. We were up over 0.5% at one stage, and we finished down 0.64 on the S&P. NASDAQ was down 0.55. Russell got hammered for 1.29. Just as it starts to outperform a little bit, what they giveth, they take it away, right? So that is a very interesting scenario. So I will show you yesterday's output of the database. I'll talk a little bit more about the database as we come into Friday as well, like I always do. So let's go ahead and take a look at the WaveTech database. So as we look at the database here, what we have is 360 buys, 420 sells. We're just getting rotation. We're at 80.62. Maybe after today, we'll see some of this stuff roll off a little bit more. I've been talking about this coming back in toward 72, 68, 72, and maybe even coming off much further than that. And I'll update, on Sunday, we'll actually have an actual real-time update. One of the things that, like I said, it's frustrating because the servers are starting to run as we speak right now. And it takes about an hour and a half for everything to run. And we run about 10, something like 10 million calculations every day and update a lot of portfolios and everything. This situation that we're seeing here is just a rotation right now. I've been talking about this once we reached about 78%, that what we're really doing is we've got into that extreme level. So we'll start to see rotation first, and we should see liquidation to follow. And possibly that sets up that move down to the 10-week moving average and that pattern that I've been talking about for, it feels like for weeks and weeks. It just keeps climbing that wall. Well, it's no longer climbing because we have penetrated the 10-period moving average. Let's go over and just take a quick look here at the weekly numbers here, and they're at 74.2 45.53, and as long as we hang in around these ranges, we're at this 45, we'll call it 45.50 plus. If that's what happens, we should still see some positive rotation, I think, here, at least stable, maybe a little more traction coming in on the intermediate database when it runs tomorrow afternoon. But for the most part, we should see just a stable environment. And this is still, if I bring this up just a little bit here, if I can get this to flow up just a bit. You'll see over here on the bottom on the right, we're still looking at a fair amount of forward-looking numbers here. The average current duration is only 56. On the optimize is right now, current average duration is 61, and the average holding is 204. So we have a little ways to go here on this thing. So it's just going to rotate. You can see the chart that's up here. This is our internal index. This is around, I believe it's around 700 stocks in this index that's up here, and they're basically an equal weighted, they're a price weighted, so it's the equal weighted index. And you can see it's starting, still looks pretty good. I could bring this up and show you what the PPMs look like and all that, but for now, we'll just leave it like it is, and you'll see exactly what's happening from that standpoint. Now, let's go ahead and get into the S&P and start to break down what happened today. Okay. So a couple things here. I left the market flow indicator on here. This is the daily. Let me go back over here. And I was talking about this earlier. We literally got a sell signal on the high here today, and traded all the way down. Yesterday's low was We took that number out. We went all the way down to 53 and bounced a little bit off of here. And excuse me, the pattern that's setting up here, at least on the hourly chart, suggests we should see some clawing back of this decline and possibly see the market grid turn up in the next hour or so. So as we come into going through the evening session, we should start to see come up and test this 10-period moving average. And right now, that number is at 45.96 and declining pretty sharply, but it will flatten up. It will flatten out as we come into that. Let's go ahead over at the daily, and this is really important. Let me take off something here. Let me take off a couple things I usually don't have set up here. Okay, so this is what I've been talking about. The algos have been signaling they're going to cut through. Looks like PPM 3 down at the bottom is even starting to take out its second derivative. So everything's finally rolling. We should at least get down to this 21-period moving average, instant replay of yesterday. And typically on this reversal bar that we get, and I'll discuss the 3-day trade again, but basically when you get that reversal, you want to sell the higher opening. So it's slightly higher at the moment, but typically you try to get to maybe an R1 where you want to put this trade on and try to get it as high as you can. That way you want to probably use the hourly chart to look for that move up to the 10, maybe up to the 21 as we go overnight. There's going to be a fair amount of resistance after this decline yesterday. And so that if you do decide to continue to stay short, I know a lot of folks were on the short side that I was talking to. I was really tied up most of the morning and then finally got free about mid-session and was able to come up on Twitter. But the entire sequence that we're looking here is finally looking at coming down into those averages as I've been talking about. So just know that we should see at least 3 days down, and the way we will get a confirmation if we close lower tomorrow. So the close was 64 on the futures, so we need to close something under 64 tomorrow. And let's just take a look at the market grid. Take a look at the market grid here, and what we're looking at is R1 45.75, R2 45.88. That would be the premium sell point for tomorrow, and S1 is 45.52, 45.39. So looking at back into that 45.40 level, and if you recall, I've been talking about coming back into that level. It finally looks like we've got the right setup to get us to come into that range, and we should start to see some pretty decent challenges of the 21 over the next couple of days. Let's say as we come into Tuesday or Wednesday of next week, we possibly, like I've been saying, I still expect us to get to the 40-day moving average, which is also very similar to the 10-week moving average. So expect to see that type of configuration set up. Should get initially three days down off of this reversal, and each day has to make a lower low, and the most critical day is the first day, which is tomorrow, Friday. It has to close lower. If it closes lower, you have a confirmation of the reversal, and then each day you don't have to close lower, but you can't make a new high from the previous day, and you have to print a new low every day, and that's that 3-day sequence. On the fourth day, if you make a new low, you take profits, or you take profits on the close on that fourth day. And that typically, those are pretty good trades. I tell everybody whenever I talk about this trade is the reason it has a very low risk normally, because if it doesn't close tomorrow and you put it on, it doesn't close lower, you're out. So it can be a one-day trade. Each day has to have a confirmation to keep you in there. And one of my frustrating things that I was not able to do was I was trying to program that 3-day trade into TradingView, and I'm still working on that. If I get it done, I'm going to release that one for free. I don't really think that's a proprietary trade. It's a standard reversal trade. Probably 2 million people know this trade. So it's just something that I've always focused on, something I discovered way back in the 80s, and always, whenever I see them, I do them. And the thing that I think would be interesting is having an indicator, or actually a strategy that would actually execute this. So I'm working on it. I could not get some of the bugs cleared out. So when I do, I will release it for free, and I'll put it on. I'll tell you how to get it, because that'll just be a free indicator on TradingView, and I'll let you know how to get that when I get it done. So I suspect I have not worked on it for a couple of weeks, so I'm going to get back in there. But when it's done, you'll all get it. But you can see here as we look at these at the market grid or the PPMs, they are all looking like we're going to decline fairly substantial. In fact, a few days out, we're not quite into trend mode down on PPM1. PPM2 is also still kind of positive, so this is why I continue to target that we're going to get down to the 21 period moving average, and that number's 45.26, but it's also rising every day, right? So it's going up 7 handles, roughly 6 handles per day. So you're going to be, that number's going to come up every day. But what we want to watch for is once we get clearly through the second derivative on PPM2, then the probability starts to rise that we'll get through the 21 and start to decline toward the 40, which is also the 10. And like I said, the plan is on Sunday is to go through a longer term viewpoint. And I'm not sure. Let me look at something here. Yeah, it's kind of a pain. I will go through some of the longer term stuff, but this month doesn't close out until Monday. So the 31st is on Monday. So I won't really be able to get all the numbers I want until Tuesday. So we'll postpone the big view of the longer term until Tuesday just because I won't have the numbers. I was thinking that it was on Sunday was the final day of the month. But anyway, it's Monday. So anyway, but I will touch on some of this stuff as we go forward. So let's go ahead and go to the NASDAQ. So look for tomorrow real quick on the S&P. Look for an R1 S2, and we could get some volatility, get R2 S2. We do have PCE coming in the morning, so we could get a bump there if that number comes in better than expected. Inflation's down. We could see a pretty decent rally. So watch out for volatility. Be really careful in these markets because I think volatility, usually when you get a day where you print STX and RTX in the same day, and actually it was RTX and then STX, you get that kind of day, you typically spike the volatility. And you can even see here on the NASDAQ, the market grid as an update, it's spreading out. It's actually widening the expectation for volatility. And that's what we're going to see across the board in a lot of these. Just when you get that kind of range, it expands the relative range, and it takes anywhere from 2 to 3 days to bleed off some of that expansion. Now, if we have a quiet day tomorrow, which I doubt because we have PCE coming out, I don't think we'll have that quieter day. Plus, there's going to be a lot of emotion, and people are going to be watching every news story coming out of Japan that they can find, and especially any comments by any of the folks there at Bank of Japan, and all of that stuff is going to be definitely a trigger for the algos and for a lot of folks. So be aware of that. But the NASDAQ did not get the reversal. This happens a lot of times. We have a reversal. We just didn't get that outside reversal bar. And so we didn't get, it's not as dramatic. The PPMs did not accelerate across the board. But as I've been talking about, the NASDAQ's been leading the way here for multiple days. So let's look at the scenario and look at the market grid here. And we're looking at S2 right now, 15,437, R1, 15,634. So that's probably a pretty good expectation. We're 15,582 right now. So it could see a little bit of rally back. We'll see what kind of number that we'll get out of this thing tomorrow. And listen, this PCE thing is a wild card. So, it could come in worse or better. And as I've told you folks all the time, the Fed already knew these numbers. When Powell was talking yesterday, he already knew all of these numbers. It's not, he tries to act like, well, we'll see what it looks like. No, he knows exactly what it looks like. It's not like they calculate these numbers 5 minutes before they're released. These numbers are calculated last week or something. So trust me, the Fed has all the insight that they need, and this is why they raised rates. They knew GDP was going to be revised. They knew everything that was about to happen because they already knew it. So it's nice to have the test so you know what the answers to the test are. So they know everything that they're seeing, including the PCE prices. So maybe they come in as expected or a little hotter. We'll just have to wait to see. Like I said, it's really a wild card for tomorrow. But the acceleration here on the NASDAQ is not at the same level as before. We're not seeing a big acceleration. So there's some support. We're sitting right on that 21 period moving average. And I talked about this before. 0.15 is the minimum value on PPMs to be a support, suggests that the market will support at that value. And so right now that 21 is 15,404 is the 21. And I would look for a bounce around there. Let me look here. Yeah, S2 is right there. So look for an S2, probably a bounce. There's still enough upward slope angle of attack of that average to hold right here. And, you know, like you said, though, with the PCE, there could be a wild card, and they would get expansion of the volatility. We could see this break down and take out yesterday's low. So the key numbers are going to be that 21 and yesterday's low. We take that out, then we're probably going to see further downside prices here. It felt pretty ugly today, and there was, I think about 15 minutes to go, there was heavy duty, you know, right on the edge, I would call even panic selling going on. There was a lot of folks caught buying into no recession, all that stuff. I've been talking, the reason why I've been bullish for so long is because that's been my scenario for a long time. There would be no recession. Now, like I said yesterday, the pain trade is actually going to be on the downside. It's not going to be on the upside because they've been squeezing these guys for a while now. You know, maybe going back to at least 4,400, 4,350. Since we've broken over there, it's been a squeeze job for sure on all the shorts out there. So that is definitely, that's a thing out there. So let's go ahead and take a look at the Russell. All right, Russell, a big time outside bar. And not only, this is an interesting pattern. So it didn't just do an outside bar of yesterday, but let's see how many. It's really a big engulfing pattern. It looks like, let me just look at this value here. Yeah, so this whole sequence here going all the way back to the highs, this entire pattern, we had higher high and higher low of this entire sequence here going all the way back to this high right here on July 20th. So this is a monster move. And then you can see we are getting the expansion and the acceleration on the PPMs across the board, all of them, even all the way down to the 200. So we definitely will challenge the 21, 1943, and 1906 is the 40. Looks like we're going to roll, and I've been talking about this configuration that the forecasts are showing us that the moving averages are going to, the 10 is going to cross the 21 and the 40, and was suggesting we're going to be in this downtrend. So it's going to get very, very interesting here. And definitely what will be interesting, especially those of you, whether you're institutional client or retail client using WaveTech or Portfolio Expert, you're probably going to see some negative impact on your portfolios over the next several days, but I don't think it will be anything substantial, or especially on the intermediate, where we would start to see some substantial selling and liquidation and raising of capital. I think it's just going to be just a consolidation. We stay above the 10-week. Nothing. The 10-week moving average is going to be the key, which is down quite a bit on all of these indexes. So this is, this is a possible a scenario that is going to unfold as we go forward. All right, now for the fun stuff. This is a pretty amazing move here, all the way up to 401. I've been talking about yesterday I was talking about a stable environment, and that was exactly what's happening. But this is the daily. So you can see the daily turned up. It looks like we got another day of positive here, or negative for the bonds, and a positive yield day coming in. Looks like we're going to stay a little bit positive here and stay above our first, second derivative. The angle of attack is very light, so it's not a super pattern here. I'm just going to go over to the weekly so we can kind of normalize some of this. So now you can see on the weekly, I was talking about this last night, where we had that upward slope of the 10. We managed to stay above the 10. If you go all the way back, the last time we closed at or below the 10 was on May 8th, okay? And look at the weekly. You can follow let me blow this up just so you can see it a little bit here. See, the white line is the 10, and we just been bouncing off that thing. We did climb below it last week, but closed above it, and now we're bouncing back up, and we're coming into around S3 on a weekly here. And so it looks to me that we still have some positive configuration, because the PPMs on PPM 2 and 3 are trying to turn up, which tells us this underlying trend is trying to start to slant up again. And this will be dominant. I mentioned last night, if you folks recall, is you're going to want to pay attention to the weekly charts, because those are going to be the dominant trends. The intermediate is going to be driving this thing. So it's going to be very noisy looking at daily charts or anything smaller, especially if you're trying to make any real analysis. So the weekly charts are going to be really important. And like I said, when we come into next week on Tuesday, I'll do the long-term outlook with the quarterlies, and when we have everything we need. Let's go ahead and take a look at the 2-year. And this is what I was talking about on the opening comments, is we did not get, they were up, but not as dramatic, and up about 5% on the week. But we're from a yield standpoint, if I go back to the daily, you'll see here, let me normalize this. You'll see we got up, and this is actually a valid print here right now. We're at 492 right now. So we're just seeing this thing just kind of a plot in here from the standpoint of looks like it wants to come back into these moving averages and ultimately come back towards 488, 490. But this pop that we got, like I said, all the news that's going to be driven is going to be Japan, Japan, Japan. And it was interesting because I had Bloomberg on for a little bit this morning, and there was some guy on there talking about, well, they might do something, but it won't have a material effect. So much for that comment. It definitely had a material effect. At least that's what, everybody's always looking for what caused the market to decline. And there was that report that came out, I think it was right at 1 o'clock. And so, that was a huge move we saw. But the configuration here on these are definitely suggesting that we're going to stay above this 10-period moving average on both the 40 on the 10-year as well as the 2-year. So that's going to be exactly where we're going to continue to be there. This is the daily crude oil, and crude oil just continues to climb that pattern as well. We got all the way up to the 80-60 level. So crude is still bullish. Let me normalize this real quick here. get a little better view here. But you can see it's just been climbing this channel for a while. It does look like this is the daily that we're coming probably 2 to 3 days from the peak. And then you can see we're seeing the forecast of the moving averages are starting to suggest we're going to roll. But that's not until about a week from now, really, next Wednesday, Thursday, something like that. So we probably continue to climb, stay above the 10-period moving average, look for that to be the continuation of the pattern. And once again, these intermediate charts are going to be what drives this. And this is a good place to be in the markets, folks, because when the intermediate model, not charts and models and everything, are in control, that means there's a more substantial trend in place. And so with all the things I'm talking about right now, that's exactly what we're seeing. We're seeing these intermediate is really in a solid uptrend, and we're going to start working the channels going up. And it's not going to be a straight line, but we're going to keep working these channels for a while. And I'm anxious to see what I come up with Tuesday when we do the live analysis for the long term. All right, so we'll go to gold next. Daily gold got hit pretty good. And I'm just looking here. It's interesting because now there's a big jump in price. So I'm trying to verify this is real. As we went out, interesting enough, at a STX buy signal, and now we're trading, showing the last trade at 85, which is up 37 handles, and was at 45 on the close. So that's a big jump. So I don't know if any of you out there, I'm just looking at this chart live, so I'm assuming this is good data. That's kind of a surprise how this moved up, but you see the PPMs all turning up. This is daily, all that, and we're still seeing, even though we closed down below those average, all of a sudden we're rebounding right back above there, and it looks like stability. And I was talking about this yesterday. We'll probably just stay within these moving averages. So this is an interesting pattern. I'll cover this more in depth on Sunday when we come in. So Bitcoin is a little bit underwater here. It's still trying to, this is the daily, starting to decline a little bit, staying under that 10-period moving average. Maybe the Bitcoiners didn't like to see Sam Friedman being carried out of the courtroom. That's not a pretty picture. But we've just been in this pattern for so long, it's ridiculous. This pattern started chopping in a sideways range, and lately we've had this slight downward scenario. So if we go over to weekly, the only thing that's holding us up is that intermediate trend that I've been talking about. Let me just expand it so you can see it. We're right on the support line there, and PPM1 is at a plus 0.85, which is trend mode. So we should be able to hold right in here. Last trade right now, 29,194. I've been screaming about 28.5 is substantial support. We should climb along this line. We'll see how all this plays out, but this is definitely a decent trend here, and we should start to climb. On Sunday night, this chart doesn't update until Sunday. So on Sunday night, we'll see if the market grid can turn up. We've seen a contraction, so we've got a little bit, not as good in this configuration, but somewhat of what's a dragon head formation, which suggests we could start to move a bit higher in this pattern. And almost be, I see somebody talking about the BOJ in 40 minutes. It'd be interesting. I'll have to hang around and watch the markets trade here. Too bad we won't be live then. Okay, folks, that'll do it for today and for this week. It's hard to believe. Just be really, really cautious tomorrow. Watch out for this volatility. Those of you that have the indicators, I would just watch within the market grid. Like I said, on all of these indexes, I think everything's probably going to be elevated tomorrow. So S2, R2 is kind of the range. Just watch how they act and see if there's any PPM setups or anything else, market flow indicators, something that's giving you some other confidence that something is happening there from the standpoint of whether it's going to be a pivot or not. I should be able to be around. I do have a pretty substantial meeting tomorrow. I think it's about an hour and a half meeting that I have during the day. So I should be around Twitter tomorrow. So if you're not following me on Twitter, do that. It's Portfolio Expert, and there's no E in the expert. It's just a big X, okay? Portfolio Expert. Anyway, folks, thanks again for being part of the channel, hanging out here every day. We've definitely got more people here tonight, but just know that what happened today is probably a significant event, but it needs to be confirmed. And a lot of times we've seen these type of things, and the next day we get no confirmation, and we got big report coming out with PCE. So just pay attention. Those of you using WaveTech and Portfolio Expert, you're good to go. Then results will be out here in a little bit for the daily models. And then tomorrow, just watch those intermediates. I don't expect much change at all. So you should be able to have a nice weekend and enjoy life without worrying about anything. Anyway, folks, thanks again for watching. I will see you on Sunday.